Hey guys, so breakdown of the EurCad trade, which I just took today. We did a risk reward of about 1 is to 4. It's about 1 is to 4, 1 is to 4 point something, yeah. It is a bullish trade, very good setup. I'll just do a breakdown to try and show you what I checked, what I looked for before validating my setup and getting into the trade. And even before I continue, I just want to let you know, in the past week, I think I've had like 3 setups on EurCad. And I'm actually using the very, very same trading strategy. I just want you to see the importance of having a solid system that you've backtested and you've proven that it works. Last week I had a bullish trade on EuroCAD. The first trade was at this point, which went and did a risk reward of I did a risk reward of 1 is to 2.5. Then the second trade was at this point when it came and retested. I also had a bullish trade somewhere at this point, which also did a risk reward of about 1 is to 2.5. Then the third trade within the past week is this latest trade here. All of these trades, I'm using the very, very same trading strategy. So just follow. As usual, I start with the higher time frame. So I try to check how the weekly time frame is behaving. So far, if you look at price from last week, we had the previous week we had a long body candlestick, another bullish candlestick. So there was still no significant sign of bearish reversal. So checking on the daily time frame just to confirm. Also from my last week analysis, if you remember, I had marked these rejections and I showed you how price has been behaving every time we had these rejections. Every time we read the rejections, price has been continuing to pump higher. So there was a very good sign that price was going to continue to be bullish after this spike here. And we witnessed, bulls trading into the market. And also if you come and mark somewhere about this previous high, which is at this point here, if you check, price came and traded above. And when price trades above the previous high, we say we have a break of market structure. So normally in a downtrend we have lower highs, lower lows, yeah. But the minute price comes and trades above that high, it could be a significant sign of reversal. Could be. It's just a potential. Sometimes it could continue even trading lower. But the minute last week price came and traded above this high, that was a significant sign that buyers were very strong in this market. So starting the beginning of this week, my direction on EuroCAD was still very, very bullish. Then you move to the 4-hour time frame. Same thing as you can see. The immediate trend is um, inevitably bullish. Buyers have been pushing price higher, higher highs, higher lows. So at the beginning of this week, I used the 1-hour time frame for entries. So first of all, it's very clear that the direction is bullish. So I'm already decided that this week, if I'm trying to look for a trade on EuroCAD, it's only going to be a bullish trade. So far, based on the current market structure by the time the week was starting. So after knowing that I'm looking for a bullish trade, as you know, I trade using demand and supply. So if you're looking for a bullish trade, I'm going to mark the demand zones and wait for price to trade back to the demand zone. So I'll just show you. I keep insisting this is how you draw, the demand. You must first identify the higher high, higher lows structure if it's in a bullish trend. If it's in a bearish trend, the vice versa, the lower high and the lower low structure. So in this case, you can see we have our prices forming lower highs. Prices forming higher lows and higher highs. Yeah, sometimes it can be confusing, but you understand. Yeah. So after this high, the next thing is that you want price to retrace. So you come and mark the beginning of the impulse move, where the impulse move begins to where we have this first bullish breakout candlestick. You extend it to the right. So when my week is beginning, I already have my demand zone marked. After marking the demand zone, your work is very simple. You just want to anticipate price to trade back to the demand zone and get a significant indication. So because we are looking for a bullish trend, when price trades back to the demand zone, we want to get any indication that bulls are taking control of the price. If we don't get any significant indication, the trade isn't valid, yeah? So we must wait for confirmation. So when price trades back here, I normally look for a pattern. but I also look at the candlestick behavior because I get the question often, do you just trade with patterns alone? So yes, I use patterns, but I like to also combine the behavior of candlestick. Yeah. So at this point, we had some sort of bullish pattern, but the reason why I didn't take the trade immediately at this point, which was actually a good idea because you see it went up and came back at break even, or maybe hit stop loss depending on where I put my stop loss. I didn't take this trade because at this point there was no enough confirmation, and by that I mean there was no rejection. Yeah. So I waited for price to trade back at this point. The reason why I took the trade after this rejection is because we had this spike. So this spike at this point, let me just mark. This spike confirms to me that um, sellers have been rejected. And this is exactly what we lacked at this point. That is why I was not convinced to take the trade. And if you look at this trade also last week you also had a spike, a rejection. So it sort of gives me that confirmation that sellers have been rejected. So after the spike, I now wait to get bullish confirmation. And after the spike, you see we got uh, some small candlestick, which was some sort of undecided, went up and came back and closed bearish. Then we got this bullish candlestick, then we had another bullish candlestick. And the thing with the second bullish candlestick at this point is it also had another rejection below. So right now I have some clear confirmation that sellers have been rejected and buyers are also confirming that they're strong. So after this confirmation here, I like to wait for price to retrace below, then I take my trade. So basically that's just how I analyze. So you wait for price to retrace somewhere here. Stop loss was below the low, it was about 30-35 pips. Then I did a risk reward of roughly 1 is to 4. It was something like 1 is to 4. So it's very simple. That's just how I got my trade. There's nothing complicated. Same concept, supply and demand, same concept of top-down analysis. You see, I analyze from the higher time frame to determine the market direction. After knowing the market direction, I already know that I'm looking for a bullish trade. After knowing that, I come and mark the demand zones because I'm waiting for price to retrace the demand. In fact, it's a very systematic formula. If you just try to copy it might even work for you. I wait for price to retrace to the demand zone. After that, I wait for a pattern. And most importantly, I want to get some rejection, then a pattern. Rejection, then a pattern. It applies every time. Same thing. We got a rejection, then we got this small pattern here. Bullish candlestick, game, strong bullish candlestick. You wait for price to retrace, get into your buy trade. Same concept always. So just to try and show you the importance of having a solid um, having a solid strategy that works, that you have back tested and you are sure that it actually works. When you have a strategy that is good, you don't need to be trading a lot of things. In the past 1 week, I think I've only taken like maybe 5 trades. Out of the 5 trades, I've only hit one stop loss. Three of them I've done a risk reward of 1 is to 2.5, another one is 2.5, another one is to 4, and one hit my break even. But accumulatively, all those trades have given me roughly 6-7% in only 5 days. So that is the advantage of just having one type of setup that you follow and only looking for that setup. So in the case that I don't find my setup, I will not trade. It's very simple. You don't force trades. One thing I've realized is you'd rather be patient enough to find a setup than make the mistake of chasing a trade, then you hit stop loss. So that's it.